Good morning, Paul Georgie from Allendale. It's September 13th, 2010. Well, the grain market's going to continue their upward path here today, the way it looks right on the opening. Corn maybe 3 to 4 higher this morning. Soybeans up 5 to 6 higher, and wheat market anywhere from 8 to 10 higher. Some of the factors that we're watching here this morning and that is causing some strength here is, number one, follow-through buying. You've got technical strength coming out of Friday in the corn market. That's spurring some buying here today. Also, I think we're getting some concerns over margin requirements from the margin clerks here at FCMs that are saying, hey guys, come in here with your money or get out of positions. That's causing some liquidation and causing some extra buying here this morning. And what we did overnight in the corn especially, we've taken out the 2009 highs, which made back in January of 2009. So we've got some very strong situations there from a fundamental perspective. We also got outside markets that are supporting things here today, with the dollar being lower, crude being higher, stock indices all higher here as we speak. Some other news that we got circulating trade here this morning. China has indicated that their soybean imports for the month of September could be as much as 72% higher than a year ago, which is giving our soybean market some strength here. Otherwise, I think with USDA report, we'd probably see some pressure on those on that market, and we may here later in the day, however. Also, there's been a meeting by the International Food Policy Research Institute that says the wheat market strength this year is totally different than what we've seen in 2007 and 8, as supplies are adequate to meet demands around the world in the wheat. We also have a meeting of a U.S. agriculture group that set up a meeting in Vietnam for the Asian buyers to try to talk about meeting their supplies and converting some of that feed wheat demand to possibly corn demand. And that, again, is one of the main things that's driving our support for corn, even though we're looking at the USDA numbers on Friday, should have adequate supplies, ending stocks well over 1 billion bushel. Traders already are talking here this morning about the USDA's next report, which comes in October, of how they might reduce the yields there. Rain through the Midwest was not as much as expected. I know I've talked to customers throughout Illinois and Indiana that were hoping to have some rain, hoping to help these double crop soybeans. That didn't happen. Very minimal amount of moisture, so struggling in some areas there. Other areas, talking to producers over the weekend, excellent yields, and they had those spotty rains that we had earlier in the month hit those folks, and now they're having great crops. So we've got a lot of differences in production depending on moisture here in the last 30 days. This will continue. We are starting to hear traders talk about, well, this $5 target is an upside target. We see topping potential in here. Right now, it doesn't appear that any market is topping, as we continue to make new highs in these contracts. We had the CFTC report on Friday, showed that we increased long positions by non-commercials to a record level, over 400,000 contracts. The open interest by funds is not at record levels yet. 21.5% in corn long positions. Their record long percentage of open interest was 21.9. So a lot of variables going on here. A lot of news that seems to be friendly here this morning, but it's like any other day where all news is positive news. So we're going to start out the market stronger in the grains. Then I think traders will come back and look at what the real situation is. May take some profits here later in the days. Something to watch for, and stay tuned to Allendale's research as we go into that time. The livestock markets, cutout values were down in pork and down in beef, sharply in the beef, over $1 in choice and $1.04 in the select. The product demand here may have its influences on futures. We think that if the product can stay strong, futures can have the potential to go up and make new highs in the cattle. However, not the case, and we've got support at 96.30 in the October contract with resistance at 97.50 today. In the hogs, we've got technical support there at 75.90, resistance up around $78. The hogs are up near that upper end of the trading range, and with higher corn prices, the feeling is it will continue to tighten up hog supplies, not see much expansion, and that could support their those deferred contracts in both cattle and hogs as we move along here this week. So keep in touch with Allendale's research. You can call us at 800-262-7538. We'll be happy to talk to you, answer any questions that you might have. We wish you a very successful trading day, and we'll talk to you tomorrow morning. Thank you.